Okay, this is going to be a trade breakdown of which I took today, Friday, the 17th of July. Gonna run through the higher time frame, the intraday time frames, and then the lower time frame, entry model, etc. Quickly run through the higher time frames. I am bearish overall and with a weekly profile of an open high, low close. Okay, looking for the top wick to be set in the premium of the current trading range, mitigate the point of interest, and take out structural liquidity. That's exactly what we've done. Once I see the rejection, I'm looking to play into that rejection on the latter end of the week, Thursday and Friday. That typically sets the weekly wick. Scaling down then, you can clearly see we are bullish, absolutely. But I am thinking in a plan-based process that I'm thinking that this price is going to continue to create the weekly wick, okay? So I'm going to trade my plan rather than what price is telling me. I'm imagining price to do this like it has done previous day, so I'm simply just looking to continue that, okay? Well aware that's against the overall trend and we could continue, but nevertheless, I'm going to trade my plan until proven otherwise. Scaling down the time frames now, I can see this is where Asian has sit. Okay, we let Asia play out and see where we sit. Okay, so in order for us to trade lower, I feel like we need context, and that context is a structural sweep, a session sweep, and a mitigation of a 4-hour balanced price range that we have got right here. This will give us the context to trade higher to then trade lower. Okay, if we scale down the time frame to the 1 minute time frame, and I mark out the start of London session, which is 8 a.m. Irish and UK time, like so. As I said before, I'm looking for the context that price can give me up here, to then trade price lower. The thing that stood out to me on the 1 minute was this 1 minute accumulation, pre-market accumulation. You can see when London opens, we aggressively trade higher. We mitigate that point of interest, okay, as well as sweeping out the structural liquidity. What I'm looking to do now is look for information from price that we are going to distribute and try to catch a continuation of that trend. Okay, waiting for confirmation is important. You can see we trade lower and we get that shift. Okay, now we have had a clear expansion to the downside, indicating accumulation, manipulation higher with a session high. You can see 801 manipulates higher, and then we get distribution. Looking for a continuation. For me, it was an EQ entry of this shift. Okay, let price play. You can see we trade higher. Okay, a key thing to note is look at time, candle profiling, 8:30. Okay, the first 3 minutes of the second half hour candle from 8 till 9 sets the top wick, and the next 2 minutes bring it to 35. We trade lower and close as a 5-minute pin bar rejection, clearly validating this area as an area where plenty of orders have been filled. I ended on EQ, gave it a 10 pip stop loss, and targeted a 2 risk to reward. Looking for this to break structure to show us that this is a valid area and orders have been filled. Price breaks to the downside, hits me for TP, and that's me done for the day. That's that trade. If you have got any questions on that, do ask away in the comment section and I'll be happy to help.